Henry watched the video on the screen setup. That's cool. Good morning. Yeah, Mohammed, the hint about scalping is you need to know the 4-hour chart. All right. It's Thursday. It is our opportunity to get together in the AM to talk about this thing we call FX. Welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders. What's on your mind? Euro dollar, Euro yen, Aussie dollar, Aussie yen, something else? What's going on? We have aligned our Panerais, synchronized our watches, so that we can cover technical and fundamental analysis together as a community. Look for trade setups, but more importantly, look for the landmines that may disrupt our strategies and our plans. Without further ado, let's get on with it. Let me remind you that trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So good morning. Thank you for being here. I look forward to our time together. Thank you for everything that you do. This is a tough gig, I know, but I'm here to be your guide and your confidant and your comrade. We'll get through this thing together. I only have 20 years of experience doing this thing called Forex, and it ain't easy yet. So anyways, so we can do this journey together. Ask questions, get involved, take notes, document those notes in the comment section below the recording of the video so that you can search your comments and find very particular videos. So if you want to learn how to scalp gold, you would just type in how to scalp gold in your comments, and then you'll find the video where you said this is an excellent video on how to scalp gold. Now you can find that in the years to come. And so you're tailor making your journey with Forex.Today. Thank you for subscribing, comments, and the thumbs up. Anything that you do that helps the algorithm is appreciated. Okay? Cool. That's that. Anything else? What do you want to cover today? I guess I should do that as a poll. What do you want to cover, like technicals, fundamentals? You know, this is Thursday going into non-farm payrolls, and then coming up not too long in the distant future, we got a Fed meeting. So we're going into a period that could be, I don't know about quiet, but we're at elevated levels where things have been going very, very well the last few weeks. And I'm really looking forward to hearing some success stories in the swing trading group. But then I'm also cognitive of the idea that the easy money has probably been made. And now what? Could be tricky the next couple of weeks. So anyways, I'd like to invite you to visit tradersway.com. You need a broker that you trust. Traders Way has earned my loyalty and respect many years ago. So please visit tradersway.com, open up a demo account, and give them an opportunity to earn your loyalty and respect. And on the day that you're ready to go live with real money and become start the journey as a professional Forex trader, at least you'll have an execution partner already by your side. Good to go. Hot to go, HOTTOGO. Oh, hot to go. Tradersway.com. And if you're new to this channel, many people on this channel use Traders Way as their foreign exchange broker. That be true. Hope's like, I can't deal with no BTC. Whoa. One of those days, huh? One of those days. All right, so let's start over here. Jambo. Let's start over here. Ooh, dollar was weak overnight and then has gained a little bit back. Yeah, that happens. Yen has been mediocre, and I think it had to do with key fib levels that we were hitting. So just sort of like, I think going into the Asian session yesterday, I was long 4 yen pairs, and I got out of all of them because of monthly M2s. Just so you know. And maybe this is me getting out of the market. I don't know. But anyways, so it was weak, and then I bailed in Asia, and now it's gained some strength. And so I take some comfort for it, but I also bought a dip. So I don't know. I guess in some cases I'm slowly back in. Well, and maybe I can go over some of these pairs to be more specific, but hang on. Let me get my drawing tool. But I was quick to get out of the trades because of key levels, and I'm slow to get back in. So I bought a dip on a pound yen, but don't really want to add things until that one's doing well. But I also have non-farm payrolls tomorrow and a bunch of other things. So I might only make 1 or 2 trades between now and non-farm payrolls if I get a setup that I think I can jam the stop on and just see if I can get totally lucky on NFP. Where NFP pops 60, 70 pips and it goes my way. And if it pops 60 or 70 pips and goes against me, then I'm just out, right? So anyway, I bought a little dip, and then I think it could totally do that. So, I'm not building a portfolio. It's just a trade. All right. So anyways, I did buy the pound, and I did sell the yen. And right now, this is strong and this is strong, so it's neutral. I believe I'm long around 50, but we'll go into that later. Euro strong, so this is good. Europe. Okay, continental Europe and the UK doing all right. Okay, that's good. Aussie's doing great. Okay, I've had quite a few Aussie trades in the last couple of weeks. Kiwi, not as many, but it's doing just as well. And CAD's been up and down. So anyways, this up right here is what makes me worry. And it's a seasonal up. Okay, it's a seasonal up. Okay. How many people here have heard me say that even though in the 3rd week of August, I want to start looking to sell yen and sell dollar, that in the 1st week, very often the opposite can happen where the dollar gets strong or the yen gets strong? How many times have you heard me tell you that at the very beginning of September, even though you're probably fundamentally anti-dollar, that you should not be in the least shocked at dollar strength at the beginning of the month? How many times have you heard that? Once, twice, 10 times? I just want to know, because if you don't know, really? You got 100 times Morena only once? Cisco every day. Yep. Over 100. Tyler's like, Mike Cordano. Yeah, I liked it at 88. And I didn't do it. I got caught up on something and got distracted. Had to look left and missed it. I like it, though. I like it fundamentally. I like Cardano. Yeah. Anyways, cool. Right on, guys. So I have to play that off my psyche, right? I could still do it. Of course, I could still do it. But do I like it at $2, Tyler? I liked it at 88. Okay. Marina says, yesterday. Really? That was the first time you heard that? Interesting. So anyways, I'll get to it. But just so I wanted to bring that up because this will impact my decision-making process. This problem with the human mind is it doesn't necessarily see reality. So I was in good profitable trades and bailed on them. It was a couple of hundred pips. I think it was more than a couple of hundred pips. But I can foresee, doesn't mean it'll happen. Doesn't mean it's reality. But my mind says, I've seen a pattern before in this situation. And the pattern says, do you remember the year you were up 200 pips at the beginning of September and you thought for sure this was going to go up till the end of the year? And 2 weeks later, you got knocked out for -3. You went from plus 200 to -3. Do you remember that year, Wayne? Oh, it was so funny. Do you remember how you felt? You felt like a donkey. What do you mean, donkey? Right? Do you remember that? That's what my mind is saying. Hey, remember that? You felt like a donkey. Okay? I started out as an ogre and ended up as a donkey. So anyways. Okay? So now imagine that's my mind, and that's not necessarily true. It's just, it is an experience. And then you look at, I don't have them set on the, let me change all these setups here. Template, Confluence. No, I guess it's just monthly, huh? Confluence monthly, Pivot monthly, Pivot monthly, Pivot monthly, and Pivot monthly. And I'm going to reset everything. Okay, so this makes me nervous. Okay, doesn't mean it's true, but it makes me nervous. Okay, from experience. Okay, this wasn't there. Okay. And CAD yen, I stayed away from CAD because yesterday it looked like this and everything else looked like that. So I didn't even do CAD. Let's move over. What's the next one? Kiwi. Kiwi I didn't do because I was overexposed to Aussie at the time. But again, I'm thinking, dude, we're at non-farm payrolls coming up and I can get out at the monthly M2. That's not a bad play. Okay, it's early and it's predictive. It's not sort of reality, but I have experience in the back of my mind. Sometimes maybe experience hinders, but the way I sort of register all of this is if this year it keeps going, but many years it goes that, I can still play the law of averages, right? I'm better to put 200 pips in the bank than give it up because I was hoping for higher. And the idea here is what you're doing is you're putting money into your integrity account. Okay? You're saying, look, I hope and I think this could go higher, but NFP tomorrow, and I'm on a monthly M2. And if you don't know, that's the exact price a bear is going to sell. Okay? Do I have the discipline to get out? Right? That's the big question. So I ask myself, do I have the guts? And so anyway, so the answer always, when I ask myself that, it gives me the strength to do what's necessary. And that's protect client funds. Cool. All right. Euro. Okay. You see, again, could be toppish. Don't you stink? Yes, I want to target here, but dude, seriously? Okay. That's more than reasonable. The risk increased, so I had to do something. And then here's the one I re-entered. Okay. So let me set this up. Okay. I re-entered this one. I got out here and I bought it at 50, somewhere in there. And it's sort of like, I mean, we talked about it yesterday. We talked about it yesterday. Like, pound has been sort of on, I don't know. I don't want to call it mediocre, but it hasn't been my favorite lately. But I saw this. And if you see the daily pivots, I guess, why don't I just shift this? Let's do now. So just imagine we're at the monthly central pivot. Okay. Just imagine that monthly central pivot. And then I go to template where I'm day trading this from a bullish point of view. Okay. And look what it did. Plus the monthly is right here, right? So what did the wane do? Okay. I bought a dip right in here somewhere. Okay. Actually, it would have been higher, right? I would have just done it here. All right. So anyway, so that's that. So now I have to drag this across, and you know, I'll move my stop to break even now. Okay. This was the Asian session, by the way. I literally bought a wok. What else do you do in the Asian session? You trade and you watch cooking videos on YouTube and shop Amazon.com. So anyways, so that's what I did. I placed a trade, watched it do this. So watched it do this and watched it do this. Meanwhile, I bought myself a wok. I'm going to walk like crazy. I'm going to walk like Yan. And then, boom. Maybe I get that. Okay. So that's a re-entry trade. But again, I want to point out, because of NFP tomorrow, very specifically NFP tomorrow, but also because of those monthlies, the monthly M2s. Sorry, I keep saying two. Monthly M3s, which are a sell pivot. I didn't enter 3 trades here. I didn't enter 5 trades. I bailed on 4 or 5 trades for profit, and then I entered 1 trade, which is that's a light night for me, right? 1 trade. You have to understand, I was here for a couple of hours, and I made 1 trade. That's it. 1 trade. Okay. Why did you not scalp it? Well, you don't consider that a scalp? Okay. I'm not even up 20 pips. Okay. So Mohammed, how do you define scalp? I bought it on a 5-minute chart. Or wait, this one I didn't actually. No, that's right. I did not. So I believe, if I remember last night, it seems like a million years ago, I was watching Euro Yen and Pound Yen. And I I had an order here, and on Euro Yen I had a similar one, and Euro did this. It didn't quite touch it, and then this came down, and then what I did is I moved my entry from here down closer to daily M2 instead of daily central, because I thought, well, this came down. Maybe I can catch a better price and not throw double risk, because I hate entering a second trade when the first one's not profitable. If I don't feel confident in the first one, why would I double the risk, and the first one's not even profitable, right? I like adding to risk when the first one's profitable, because then it's not actually adding to risk. So anyway, so I pulled this one down, and then it's stabilized, and it was fine. But I walked away from the euro, and but this certainly could have been a scalp. I mean, there's nothing really interesting about it. I mean, that's just how you day trade. Like, what better entry would I have gotten? It's your call. Because, like, even here, like, what are you scalping, right? Like, I'm not sure what technique you'd be using. Now this is based on spread, of course, right? So, like, I don't know what technique you would have been using. And now I'm going to do this to scalp it. I was just trading the Asian Open, so I did a day trade, I guess. Anthony's like, yeah, no Martindale trades. Yeah, I very much dislike that style of scam, right? Right. What's that trade? Trades like 200 pips on pound yen. So I've made I don't know, let's say 250 pips this week or something, and it's been like some Aussie, some pound. I think it's second Aussie. It was 4 or 5 trades, right? So nothing big, but yeah, definitely one of those. Now, pound Aussie, I generally don't do cross pairs. Anyways, okay, because I'm a trend trader, not relative strength trader. Although I can do it, but that would be closer to a scalp. All right. So anyway, so that's how I handled last night. And you might be saying, Wayne, you didn't handle it properly, and I'm okay with that opinion. Okay, I'm okay with that opinion. But I bring scar tissue with me, and in some years you get this. And I thought maybe there's some good profit taking at the very least, right? Or if sellers sell, I don't want to like wake up and see that I gave half my week back because I didn't have the guts to do, right? So whatever. So now if the pound yen works out, I'll add another one. I still got to get through NFP. Right. In May, you said that we should stay away from scalping. No. In June, July, and August, you should be scalping. You should be day trading. You should be doing market opens. You should not expect fundamental trends in the summer, Seika. So you got that backwards. Okay. If you're talking about very early May, from May to June, yes, you should be swing trading. You should be day trading. Yes. So maybe that's what you mean. Yeah, it would be stupid. Sorry, not stupid. It'd be silly to scalp your way through May when, dude, you're staring at swing trades. Right? So you could scalp in May, but it's silly. All these trades are worth 200-300 pips. Why would you take 20 and walk away? So maybe that's what you're referencing. Okay. I did not mean I don't scalp. Okay. I spent an entire year doing nothing but scalping to see if I could do it. And it was cool. I like it. But what it did was it added to my ability to get into a trade. But I think the real value that I have gained from learning different types of strategies, because I want to be well-rounded. I've always wanted to be well-rounded, right? There's no sense being a golfer that hits long drives, but you can't chip or putt, okay? You want to be well-rounded. So I think having done like swing trading, let's say as a primary style, and then spending an entire year mastering scalping, I realized the strength and weakness of both, but how they could work together very well. And I found that the scalping allowed me to get into my swings at better prices. Okay? And so it will look like a scalp. That's the thing. It looks like a scalp. I'm on a 5-minute chart. I'm looking for an oscillator rollover. And I go, pa-chow. And it looks like I could do a 2020 OCO. Except I do a 33, 333. I do that from time to time. You know, a fair amount. Honestly, I enter a trade on a 5-minute chart and I'm like, okay, I'll put a 33 pip stop on that and a 333 pip limit. And to me, it's a scalp. The technique is exactly the same. Okay? Now, if a true scalp, sometimes like if I'm really just messing around, I'll do like a 15-15. Because nowadays, to get the market to move from negative 25 to plus 25, shoot, that takes 6 hours. Sometimes it takes a day because that's a 50 pip range, right? And now that takes hours and hours, maybe a whole entire day. I'm like, oh my God. When I first started trading, you could do this 15 or 20 times a day because it would pop in 2 hours. You know, you could see a 100 pip move this way, and then a 40 pip move that way, and then a 75 pip the other way, and then 120 down, and you'd have an average daily range of, let's say, 135 pips on a pound dollar. But you would cycle through that once or twice in the day. Now, like, gee whiz, it's slow compared to the old days. That's why I kind of, and I mean no offense to anybody. I'm not here to pick on like my style's better than your style kind of thing. But in my experience, compared to the old days, I chuckle at those that scalp as a primary trading strategy or style, because it seems so slow that even then the scalps are not really scalps. Like typically a scalper doesn't make 50 pips in 3 minutes, or 30 pips in 3 minutes, or 20 pips in 3 minutes. That's what a scalp used to be. Okay? I have made and lost hundreds of pips just on slippage in the old days. Let me say that again. I made a trade, I sold, and I remember this, right? I sold USD yen, the slowest of all the pairs. Okay? I sold it and I was up something like, I'll make up a number and you won't even believe it, but let's say I made 500 pips profit. Okay? And I clicked the out button. Okay? I clicked the out button. While I waited for my order to be offset, I was up 700 pips. While I was waiting, I made another 200 pips. I remember it clear as day. I'm like, oh my gosh, right? And then what? By the time I got out, I had 400 pips. Yeah, because it went like this. It was down, 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 ba 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 ba, and I got taken out higher. I lost 100 pips from when I said out, but not just did I lose 100 pips on the slippage, and this wasn't Trader's Way, by the way, and this was a million years ago. I believe it was GFT. Right? Not only did I lose 100 pips on slippage, but while I was being slipped, I made 200 pips and then gave. So I was slipped a total of 300 pips. And someone comes in like, I scalped the euro dollar, made 22 pips in only 2 hours. And I'm like, okay. That my personal opinion, I might say, well, that's not really a scalp. And that's why I do a lot less of it now. Okay? Because it used to be one of these things, guys, like think of it. The stock market opens. Okay? Think of this. The stock market opens and you see suddenly the USD fall, which means the stock market is opening higher. So there used to be a time when you would do something like this. Buy, 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 buy. Okay? And then out, 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 and out. And each one of these would be 50 pips. And it would occur in the first probably 15 minutes. 15 to 20 minutes. And all of a sudden you're like 50, 50, 50, 50, 200. You made 200 pips on the stock market open and now you're done. That I don't see that kind of trading anymore. So it's just different for me from my experience. Now, I caution those that maybe see other YouTubers and I get sucked into sort of, it's an old story. Like that doesn't really occur anymore. But it's a very sellable thing to say we can make a lot of money quick in Forex. I don't see it that way anymore. There was a time when that was more true. Okay. And I think now it's just less true. And that quote unquote scalpers are more like intraday traders, right? I used to call it spot trading, where the New York session would open and euro dollar will go up or down. And depending on whether you're a bull or a bear, you enter in your trade. And over the course of 2 or 3 hours, you can make your 25 to 50 pips. And then, and that's good. Okay. But to me, it's a lot slower. Yeah, Anthony's like, yeah, the spread used to be 15 pips. Yeah, for sure. Yeah, for sure. Okay. Greg's like, yeah, Aussie and Kiwi are strong in the market. Yeah, I've done very well, on Aussie lately. It's been one of my favorites for sure. So anyways, let's just check commodities and then get on with it. We'll do dollar pairs and yen pairs next. Okay. Crude just bouncing between, right? But here's the thing. It found support. So now there's more potential for upside. Okay? You see that? So that's cool. Drop into a smaller time frame, and this might be our leading indicator. However, and I have to say this, non-farm payroll screws things up for me. I'm not aggressive right now. Okay? And then Nat Gas reminds me, not only are we on monthly M2s, there are quite a few pairs that are at weekly targets. Okay? Not the ones I was in, but there are some things that are topping out. And it just, if some things fail to go higher because they've topped out for the week, other things could top out for the week or pop up and then come right back down because they were overbought anyways. And, again, I see the warning signs and I have to remove risk because I'm a risk manager. Yes, I like the opportunity, but I'm more concerned about the risk. So that bothers me, especially with NFP. All right. Cool. What is this? Gold. So plan A has, I should remove this. This was the counter, if you remember. I need to move that. Okay, that was if plan A fails. What we're looking at is the up. That's what plan A is, up. So it hasn't gone anywhere. Now, does anyone remember? I made another trade yesterday on a pair. And it was an Aussie, I think. Do you guys remember I did a 33.99 OCO? It worked out, by the way. I hit the 99 yesterday. Morena says, why is NFP such a concern to you this month? It's not necessarily a bigger concern. It's just, I know it's there. It's a singularity. It's like there's a black hole. I know it's there. So I need to go around it. I'm not going to add a whole bunch of trades today and then something wrong happens, right? Tomorrow. It goes against me and something bad happens. I don't want to be in the tsunami. So I'm just staying at higher ground. I'm getting a tall hotel. But like I said, I just got to tiptoe in. So like yesterday I took those trades off, but then I entered another trade but I didn't enter 5 new trades, you see? So that's all. It's not that I'm overly concerned. I'm just cautious because I know it's a risk event. Della says, I was an FX boot camper back in 2008, 2009. Yeah, we used to scalp the news from London and then get it, yeah. Yeah. For sure. Yeah, that just doesn't happen anymore, eh, Della? Hey, Della, what was your hotcom name? Or were we using something else? Maybe by that time we were using something else. Now, Ali says it again. I don't know if you said it a couple of weeks ago, but somebody else said something like that, where Ali, someone said the Fed looks hawkish. No, I don't know where this comes from. There's nothing hawkish about what they said. Now, there could be an interpretation. Let me argue against myself. Yeah, do you remember your hotcom name? All right, so let me argue against myself. This is something Harvard taught me, that every complete paper will have very clear thesis and very clear evidence to support your thesis, but then you also need to expose the counter argument as well. The counter argument is this. Jay Powell during Jackson Hole, he said, do not look at the taper. I forget the exact words. Don't look at the taper. He's like, first of all, he said, yeah, well, there's good reason to taper by the end of the year. Okay, great. But we all knew that anyways. Great. But then he also said, let me tell you, do not look at the pace or the timing of the taper as an indication of how soon we will raise interest rates. Did you guys catch that? Like I've read about it and I've thought about it to the point where I know the exact line. So I hope you do the same level of thought. Okay? So now let me ask you, what does that mean? Do not look at the timing and the pace of the taper as a sign of when interest rates will rise. Either type in a question mark if you have no idea what that means, and of course I'll tell you my thought, or please type in your thought. What does that mean? It's the whole point of fundamental analysis. This is a little more behavioral finance, but okay. What's your thought? Or just type in a question mark if you're like, dude, I have no idea. Thank you, Riyadh. Okay, lots of answers coming in. Thank you for your participation. Okay. Now, I would argue that many of your comments are, dare I say, we already knew that. So that's not what value he's adding. Nuno is saying more like the timing. Well, that I could argue a time based on my thought process, but they're not saying that either. That's not what they're saying. Now think about it. Do not take the timing and the pace of our taper as a sign of interest rate policy. We already knew they were not going up anytime soon. So many of you guys said all of that. But that's not new. That's not the new information. Think about it. What is new? Do not take the timing, and the pace as a sign of future interest rate policy. Think of it. Think of the sentence structure. Okay? So let me change it then. Before I tell you my point of view, let's discuss it openly. Some people thought interest rates were going to go up soon. Some people thought that doesn't make any sense. Like I've been telling you, it's going to be 2025. I told you that last year. Some people think it's going to be next year. I mean, years off, right? Some people think interest rates are going up as soon as possible. And some people are like years and years and years. Okay? So he's counter-arguing. You have to understand, he says, don't read the pace and timing for taper and say, because of what they're doing here, then interest rates will do something similar. So think of it. I don't think they're going to raise for a long time. Some people think they're going to raise immediately. So what is Jay Powell saying? I'll give you another shot. I hope that warmed it up. I'll give you a couple more guesses. In fact, yeah, I'll do a poll. What did the Fed imply in Jackson Hole. Taper soon and slow. Taper soon and fast. Taper later and slow. Taper later and fast. Okay, yeah, let's do it that way. Let's see what you guys think. Of course, now later and soon is debatable. What does that mean? And slow and fast, but still, you have to pick one. Yeah, Raymond. Yeah, that's been my argument for a long time. That doesn't mean that's really what he's saying. So let's see as people add. We only have 42 votes. Okay. Matrix is none of the above. Well, that doesn't make sense either, Matrix. Come on. What's the other one? You think not taper? But he actually mentioned specifically when he was going to taper. Okay. But if it's none, yeah. So I don't know what, then Matrix, maybe just type in what you think he said then. Mahai, that they will not taper at all, but he specifically already mentioned it in the speech. Maybe you didn't watch the speech or read the speech. I've watched it, read it, thought about it. Okay. All right. So 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right. Thank you for participating and contributing and putting some thought into this. And of course, now I'm just simply going to give you my opinion, but I don't know any more than you. Okay. All right. All right. So in my opinion, I've studied the Fed pretty reasonably well. I understand monetary policy. I've thought about the learning experiences that the Fed has had during this cycle where they were aggressively raising interest rates and then they had to aggressively cut interest rates and all this kind of stuff. And the way I've read the Fed, just so you understand my point of view, is they're dovish. And a few people recently have said, well, everybody knows they're hawkish, and I just tore that wall down. Okay? So anyways, I believe they're dovish. I believe everything they've said for a year and a half is dovish. They're so dovish that I don't understand why anyone would say they're hawkish. Okay? So anyways, this is my point of view. So with that point of view, the Fed is saying, look, dude, we are not going to raise interest rates. We're not thinking about raising interest rates. There's not going to be an interest rate in 2023. We're probably not going to hike in 2024. We're not even thinking about raising interest rates in 2024. It could be 2025. It could be never. We could be stuck like Japan for all I know. I just don't know. But we are a billion light years away from even thinking about interest rates. Oh my God. However, he did say there is good support for tapering by the end of the year. He literally said that. By the end of the year. Dude, do you think that's a signal? He didn't have to say that. He specifically said, yeah, by the end of the year. This is what they have been talking about. Now, this is what I said a year and a half ago, that it'd probably be the December meeting because the last taper tantrum was December. So December 2013. So like they like to announce in December and start in January. So we already knew that. But in my book, when he said, yeah, there's good evidence by the end of the year. Okay, that makes sense. Check, got that, understand. But then what did he say? Don't take the timing and the pace as a sign of future interest rate policy. So I used to say he's going to taper starting in January and do 10 billion a month. So exactly 12 months later, the taper will be over. How many people heard that? Announce in December, start in January, 10 billion a month, and by the end of the year, by the end of 2022, they are done, and in 2023, they're still a million miles away from interest rates going up. How many people have heard that? Okay, I just want to make sure. Okay, the next part is so he said, I have to say it again, do not look at the pace of the taper as a sign of interest rate policy in the future. So I got the timing, I think I got right. But now what's he signaling? Don't take the pace as a sign. Well, we already know, I think, professionals already know the pace is, or they're not going to raise interest rates for a long time. I think most people understand that. So what's he saying then? If we go slow, don't take that as a sign as we're going to go slow on interest rates. No, there would be no reason to say that. Why would he say that if we already assumed it? So I think he's going to go in announce in December, start in January. But the thing that might be new is that they're not going to taper slow, they're going to taper fast. Otherwise, the signal is worthless because I think most people okay, they're going to go slow. There's no need to taper fast. There's still risk. We still got COVID and all that kind of stuff. And interest rates are a billion miles away because all the inflation is transitory on the supply side of the supply-demand equation. So the Fed can't do anything about that. So there's no reason to raise interest rates. Okay. So the only new information I believe that occurred is he confirmed the end of the year sounds pretty good. But I think the signal was they're going to go hot on the taper. Maybe 20, maybe 30 billion a month. Get it done soon. And then do nothing for years and years and years, because if the taper is fast, what did he say? Don't take our fast taper as a sign we're going to raise interest rates quickly. That's the thing. Don't take it as a sign. So he's saying one is going to be different from the other. Do you understand the logic there? Now, I don't know anything. I'm just sharing the logic, okay? And I'm particular about language. So the meaning of things, right? Don't take it as a sign means they are not going to be the same. Otherwise, it would be a sign. When you read the sign and the words are right there, well, then that's a sign. So don't read the sign. If it's not a sign. So then he's like, dude, I got to prepare these guys. I want to taper from quantitative easing fast, but I don't want them to think that that means interest rates are going to go up hard and fast too. And the bond market crashes, the stock market crashes, and it all comes down like a house of cards. I don't want that to happen, says Jay Powell. I must give the market a signal. So I'm going to taper hot, but I'm going to be cold on future interest rates. And that's what I think. But I watched the speech live, I read the report, and I've thought about it deeply. Pondered like, what did he mean by this? What did he mean by that? What could he have meant? What did I think? What do other people think? How does it all come together? Okay? Theta says, doesn't mean it'll be an unequal event. That doesn't make sense either. So it's sort of like you're the CEO of a company and you have $1 billion in stock options. The way you sell can actually be illegal because you have inside information about the company. So if you sell 500 million worth of stock and then 2 weeks later the company announces that lower profits or even the company lost money, they're going to say, oh wait, you sold stock when you knew the company was having problems, but that wasn't public information. That's inside information. And like, you can't do that. You can go to jail for that. That's a crime. Okay. So instead, what they do is they just do it on a regular schedule. So they say every, April 15th and September 15th, sell exactly 10,000 shares. And you do this, on an ongoing basis. The Fed's not going to go like stop, 10 billion this month, 48 billion that month, 12 billion the next. That's just not how that works. It's going to be on a pace. They're going to say at 30 billion a month, they're going to say at 10 billion a month, something like that. So in 30 billion, it's going to be 4 months. If it's 20 billion, it's 6 months. So maybe it's 20 billion. Okay, instead of 10. And people are like, oh my God, 20 billion, it's a sign. Right? Right? It's a sign. Look at his shoe. It means he wants us to follow him. No. Right? No. So anyways, it's not a sign. But that taper will be scheduled. So it's either going to be 12 months or 6 months or 3 months. I don't think 3, but I think what he's saying is how I changed my outlook is I thought the taper would take 12 months. Now I think the taper will take 6 months. Okay. That's what I learned from Jackson Hole. Okay. I might be wrong. I might be right, but at least I thought about it. Okay. Now, Ali says, there goes the market if they taper hard. No. Why? Spain me that. Think about it. Like, literally sit down and do, like, why? I don't understand that. If the Fed is leaving the market, yield will go up. And junk companies will have to pay appropriate price to borrow money. There's nothing wrong with that. I think there's something wrong with like Apple issuing a 40-year bond at 1% and getting free money they don't even need because it's so cheap. Why wouldn't you just do it? That's a problem. That kind of stuff is a problem. Okay. I think that's weird. Money needs to be priced appropriately for the market to be healthy. Okay. I want prices to be normal. There's too much debt. Yes. So we got to get the Fed out of the market. So if it's 20B versus 10B, fine, good. Okay. But the Fed funds rate is going to be at 0. By the way, everyone is about to taper. Everyone. ECB is going to taper. Bank of England is going to taper. The United States is going to taper. Right? Canada is going to raise interest rates. New Zealand is going to raise interest rates. Korea has already raised interest rates. Okay? It's all happening, guys. But if the bond market's going to fall, great. Cool. Don't worry about the companies. They already issued their bonds. What kind of company needed money but decided not to issue bonds. Doesn't make any sense. So all the companies are well capitalized. Okay? Well, hey, Matrix, I happen to love economics, finance, investing, small business management and leadership, nonprofit management and leadership, and entrepreneurialism. So if you didn't get that in school, I'm here, man. I'm here. I live it and breathe it every day. Jimbo says, but that's a collusion on currency manipulation. Sometimes it is straight up collusion. Sometimes it just makes sense. So the Fed will move and then everybody else moves, and it makes sense. Okay. Okay. So gold again stuck here. Oil maybe. Okay. And yeah, I don't know. Bitcoin looks great, actually. Somebody said something negative about Bitcoin. That actually looks pretty good, man. Look at that. Look at these. These actually look good. Okay, and now there's risk up above. Okay. But those look, you see the role reversals? That actually looks quite good. Look, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy. Those are actually pretty good trades. Okay, look at that. It's probably a real body, but anyways. Those are actually pretty good. Yeah, riding a 5 the whole way like that. That's actually quite good. Riding the 21 on the 15. Oh my God. Look at this. Okay. What you do now is you go bup, 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 bup. Okay. Nice. Kick it over here, baby pop. Yeah. Look, higher high. Look at that. It's actually pretty good trading. This is now we're stuck, which is interesting on this time frame. But that's some pretty good trades, actually. Price action. Look at that, just bullish and aggressive the whole way. Okay, we're in a consolidation now, but you have to remember this is suggesting up until it drops. Right? But right now, if you're above the 21, you're bullish and aggressive. You're not even thinking down. You're like, there's just no way it's going to go down. So if it drops, you should probably take that as a sign. But if you're bullish and aggressive, you're like, never in a million years is this falling. So, you know, you're long in here somewhere, I'm sure. Cool. Good job, Bitcoin. Bitty, 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 can't you see? Sometimes your words just hypnotize me. All right. Just waiting. Waiting for the sky to fall. Something like that, isn't it? Okay. Waiting for the grass to grow, waiting for the da. Isn't it a Dr. Seuss? Dr. Seuss, S-E US. Do you guys know this one? I don't know what these are. Anyways, too bad. I can't get the quote. There's a great quote on "Everyone is just waiting." Wait, maybe this is probably it. A picture of it. Yeah, this is it. Where is it? Oh, yes. Man, I read this to my kids, and my mother read this to me. Waiting for the train to go, or the bus to come, or the plane to go, or the mail to come, or the rain to go, or the phone to ring, or the snow to snow, or waiting around for yes or no, or waiting for their hair to grow. Everyone is just waiting. Waiting for the fish to bite, or waiting for the wind to fly a kite, or waiting around for Friday night, or waiting perhaps for their Uncle Jake, or a pot to boil, or a better break, or a string of pearls, or a pair of pants, or a wig with curls, or another chance. Everyone is just waiting. You have to understand, my mother read this to me as a child, and I read this to my children, and it's the basis of my life philosophy. Right? So, yeah. So here it is, man. There it is. You have to understand, like, this is the strategy. And the tactics now are you're buying these dips, right? So we have this as a buy zone, right? We have this as a buy zone. This was a buy zone. Now this dropped below the buy zone, but today it was on the buy zone. And now we're in tomorrow's buy zone. And the idea is maybe, just maybe, we'll bust through resistance. And NFP could do one of these things. Boom. Okay, great. But I worry that many people just lose sight of something as basic as this. What is your intention? What do you intend on doing? I have no idea. If it's at resistance at the London Open, I sell it. You're like, wait, you're selling this? Why are you selling this? Okay. So anyways, I'd like for you guys to define your strategies before you trade, right? Okay. That's why I have all these lines. Look at these lines. It shows. And now we're up here. So what is it that we're doing? Let me get this tool here. What is it that we're trading? Oh, I want that a different color. Okay. We're doing this. Okay. And I could even guess on the future doing something like this. Okay. Meanwhile, I believe amateur traders have bought and sold this all over the place, but generally not at support or resistance. And there's just a lot of nonsense gobbledygook in the middle. That's my concern. Okay. Instead, you could say, I'm a bull because that's my strategy. So again, let me highlight the strategy. So as now a smaller time frame trader, what is it that you do? Okay, you buy at support. Oh, that's the wrong color too. Let's do this maybe orange color. Okay, you buy at support, you buy at support, you buy at support. Okay, you buy at support. And you say, well, it's kind of like a current. I'm like, yeah, like the trade winds. It's a current. Okay, trade with the wind. Okay. What's your favorite template that you use for a 4-hour and daily? I don't think I have a favorite, but we could look at this. Okay, let's change the template. Like, that's good. If I'm on a daily, I'll probably look at monthly first. Okay. So, for example, a bull is going to try to buy in here. I'm looking at this time frame, which was last month, right? August. Okay, August. What are my basic assumptions? Using technical analysis. I don't care about the pound dollar per se. I'm just looking at this. Bulls are going to buy it low down in here. Okay? And this is also an assumption from July. This is an assumed bearish exit. So I know counter trend traders are going to look for this. Okay? They're going to look for this. And a counter trend trader in this case is more bullish and bearish. They're trading against the bears because they believe the bears are going to get out. Another assumption is the target for this bearish exit is here. Cool. Now, for bears, I also believe that this is where they're going to sell. Now, I believe their target's going to be down here if they're in control. That's the belief. Okay? Doesn't mean it'll happen, but that's what the chart says. Great. So when I read this now at the end of August, I say, oh my God, it didn't hit the target. It bottomed out. Okay? So my assumption now for September is an M2 to central pivot bottom. And a top, okay, is somewhere between M4 and R2 top because of the double bottom. Now, for sure, it could do that. And then you'll have to get knocked out of break even or take a loss. But the assumption is the bears had their op and they failed. Cool. So now it'll at least consolidate for a while and then break to the upside. That's the thought. Okay, great. Do we know if that's true? No. But we do need to add that data now. So let's add that data. Oh, look. So I'm in now my buy zone. But notice, though, we knew this. We didn't have to wait till September 1st. We knew this last week. Okay. Okay, so again, what I'm talking about now is the assumption was this. And the best price you could hope for, you could wish for, is the M2. So let me clear that out. Where's the M2? This is the M2. And that, in my opinion, I can't prove it, my opinion is somebody did the front run. This is a predictable out for bulls, or bears, which means bulls could do the counter trend, but this is a predictable in. Okay? And if it is, which again, I don't know if it is, but if it is, what's the target? Well, I already indicated the logical target. I don't know what's true, but the logical is M4 to R2 as a top. So let's go see where that is. Boom. So I see that's approximately 140. Okay, 140. That's a nice good psych level. Okay, so the basic standard operating procedure here is this. Traders bought here and they're going there. Is that for sure true? I don't know. Okay. But that's what the bulls are thinking. What are the bears thinking? A bear is going to look to sell it here. Okay. And there's all my assumptions. So from that, I have strategy. Be cautious at 38.50, but we're on our way to 140. So now, that's a 4-hour chart. I think I was on a daily for a bit. Okay, so good. That's where we're going. And so now I drop into small time frames and use like daily pivots now and buy logical dips. Okay. So I see higher high, higher low, right? This was the role reversal. Take a look at this. Okay. Looks like a higher high to me. Okay. Got ourselves a little fitty. And the logic is we're on our way. The next challenge is 38.50. And you're buying it at 37 and 80 or something. 37 and some change, right? Good. So you're buying at 37.80 and your next stop is 38.50. What do you guys think of that? Can I get a like button? 50% of the people here have not clicked the like button. Okay. Lovely. Cool. Thank you. Thank you. I appreciate that. Thank you. So today I will be working with my live trading groups. So I would invite you to join. I'd like to work with you until at least the end of the year. And then January, February, March is a whole different game. And then April, May, June is a whole different game. Yeah. So times are good. Things are good. Things are good. This is great. This is good time. The market is doing reasonably well and behaving in very reasonable ways. We have a unique situation this year where there is likely to be a change in Fed policy, which changes what we do. And I think central banks around the world are all going to change their policies. So I think the next couple of years are going to be really good years. And I think much of the market doesn't understand, which means it is inefficient and there will be mistakes made, which will give us lots of opportunities to make money. See, an efficient market theorist believe that there's going to be no room for arbitrage because everybody knows everything already. So everything's been arbitraged out and there's no ability to make any profit. And I say phooey to that. Okay? I say people is smart. And I have to thank Morena for that because I used to say people is stupid and she's like, you need to be more positive. I'm like, you're right. People is smart. It's the same funny joke because that's poor English. So I'm like, yeah, it is funny. People is smart. So yeah, people is smart, but they make mistakes. In particular, they make mistakes under duress. So I think my theory is 90% of the time, the market is rational and efficient. And 10% of the time, that gets thrown out. That goes to hell, right? It goes to hell fast. And all of a sudden the market's irrational and freaking out. And really, I think the reason for that is people make lots of little mistakes when the market is good. They're in late, they're in stupid, they're in too big, all this kind of stuff. And the market trend, I guess, covers up a lot of mistakes. And when the trend ends, it exposes all those mistakes and things crash hard. People are in big at the top, so they're late. And they had to be big because they're late. They missed the bottom. And in fact, they probably were doing the wrong thing at the bottom, lost a whole bunch of money at the bottom. So now to make up for that, they're in big at the top, which you know is another mistake. So they were stupid at the bottom and they're stupid at the top. So anyways, all of that has to be corrected out. And if you're patient and disciplined and you do your homework and you put in your thought process into what you do, then their mistakes put your children through college. Your mistakes puts gas in your jet. Or their mistakes feeds your charity. And that's all right by me. Peace on earth, may the pips be with you, may your profits be above average. If you're in my live swing trading group, I will see you this afternoon. And it's epic. It's my favorite 2 hours of the week, honestly. I can't wait to see you guys. Cheers.